Let's check in on GameStop shares and where they're trading. It comes as Robinhood resumes trading in the stock, as you can see, up some 86%. Overnight, the trading app raised $1 billion from existing investors. And talking to Chris Cuomo last night, the app CEO ruled out interference by market makers when they decided to restrict trading in these stocks.
I know that there's rumors around that, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participant.
Listening to that with us, Dave Portnoy, the founder of Barstool Sports. To say he's been vocal opponent of Robinhood's actions is an understatement, but we like those. Dave, great to have you back with us. What angered you most about what happened yesterday?
Well, I mean, they basically, the name of the company is Robinhood, steal from the rich, give to the poor, and they did the exact opposite. They stole from the poor and gave back to the rich. I unequivocally don't believe what he just said. Vlad, I think he's lying about that. There's just no rational explanation on why they would do what they did without outside pressure, interference. They had to know what they did was against all their clients. Their clients were the ones who were making money, and they basically cratered the stock on purpose. So I just don't believe anything that guy says. I wanted to take a cold shower after seeing him say that.
The Robinhood CEO is not here to defend himself, and he has an open invite and long has to come on this show to defend himself and talk about what happened. What if the share price had been falling, though, Dave, and people would have been losing money? Would you have been as angry?
Well, I mean, that's the risk that traders do. And the stock market itself has triggers when there's unusual activity. It halts trading. But the people who invest in this stock weren't doing it with their eyes shut. They know there's risk. And I've asked this a lot. How many times when the hedge funds are making millions of dollars, billions of dollars, there's an article that I saw Citadel make $6.7 billion on volatility of the stock market. How often do they stop it and say, hold on? No, it never happens that way. This is the first time I can ever remember where you could only sell a stock, you couldn't buy it. If they were that concerned, they should have froze it, and you can't sell or buy. And if people want to liquidate at the price they had the stock, that's fair. But to crater it, and again, in the history of the stock market, don't ever hear the rich guys, the institutional firms, the hedge funds saying, hold on, we're making too much money. You better protect us in case it goes the other way. This seemed like it was just the little guy was winning and the rules changed on the fly.
Yeah, it seemed like panic. I think to everybody it seemed like panic. They've clearly had to raise a lot of money as well to shore up their own position. They're like a young company, though, as well, and they've had this swarm of new investors coming onto the platform. I guess you could make the argument that they have to make sure that people have the money in their accounts to be able to buy these stocks. But, Dave, I think you raise a good point. This stock's up 1,000% year to date. Action should have been taken surely earlier and should have been communicated better.
Yeah, and I saw his interview on CNBC, Vlad, and this is a direct quote from him. He said it was not a liquidity issue, and he said it was to protect the people on Robinhood. That's garbage. How did that protect the people on Robinhood? I'd like to find one person on Robinhood who feels that they were protected. They literally intentionally cratered the stock, unless they're the dumbest people alive. If you only let people sell and you can't buy, pretty obvious what's going to happen to the stock, and that's exactly what it did. It cratered it.
And then they relaxed the rules. Again, Robinhood not here to defend themselves over what they were doing, whether it was to shore up their own position, the artificially created selling pressure, because that's clearly what we saw in the market. I think to your point, Dave, the access to these platforms is free. And part of the way they do that, the business model, is they get all these orders from people and they give them to a bigger company. This case, one of them is Citadel Securities, and you've mentioned the name, so I'm bringing it up. And they get paid for that. And that's also, I think, what's created this sort of stinky sense that perhaps information on their positions was being shared with one of these hedge funds, quite frankly, but that hedge fund says it's not. Either you get democratization of finance and you get free access, or perhaps you need to pay for it and you don't have those concerning relationships going on. What's the answer?
Yeah,
Do you get charged for using this platform, or should it remain free?
I have no problem with it remaining free. If you can't change the rules midstream is my bigger thing. And I did bring up Citadel, but it's well known that Citadel and gave money to Melvin, who shorted GameStop, and then you have Citadel, who's involved with Robinhood, and there's a lot of very interesting things. But essentially, it appears, from my point of view, that by cratering these stocks, they allowed these hedge funds to get out of their shorts. So that's what it looks like happened. And, you know, these people can go in front and say things that if you are logically thinking about what they're saying, Vlad and others, they don't make sense. They just don't. It seems like we're being fed lines, and I just don't believe it.
Dave, do you think the system's rigged?
Yes, 100%. There's not a doubt in my mind that I think the system's rigged. Wall Street, I think if you ask most Americans, they'd say, yeah, it's a dirty game. I said this yesterday. Julie, it takes a lot for AOC and Donald Trump Jr. to be on the same side of an issue. But they were yesterday. We haven't been able to agree on anything. And suddenly everybody's like, wait a minute, this stinks.
We had to make a very difficult decision to protect our customers and our firm.
Why?
But we in no way
why? Explain why you had to do it if it wasn't to protect the guys who had shorted the stocks, which are the big hedge funds. How are you helping the little guy investors?
Well, I know that there's rumors around that, you know, we were directed by market makers or other market participants to do this. And I want to be 100% clear. This decision was not made on the direction of any market maker or other market participants.
So why'd you do it?
Decision. Robinhood, as a brokerage, has lots of financial requirements, SEC requirements. We have to put up money at clearinghouses. The amount of money that we have to put up depends on market volatility, and we're in a historic situation where there's a lot of activity and a lot of buying concentrated in a relatively small number of symbols that are going viral on social media. So we haven't really seen anything like this before, and to prudently manage the risk and the deposit requirements, we had to restrict buying in these 13 stocks, but customers that held them could sell throughout. Thousands of other securities and stocks on our platform were available to freely trade. And our number one priority, as you mentioned, is to make sure our platform is reliable, stable for our customers. We're serving our customers and giving them the tools.
But that's exactly what's a question now.
We're doing everything in our power to turn it back on as soon as prudent.
But that's the thing, is that the trust is in question, because it seems like the only people who are getting hurt were the big shots. And that if they were benefiting from this, your small investors now believe that you wouldn't have shut down the game. And just one thing without getting in the weeds here. You don't control the listing venue for GameStop. Now, I used to work in finance, so I know this stuff, but the audience doesn't need to. The New York Stock Exchange does. So if anybody was going to control the listing and shut it down, it should have been them, but it wasn't. It was you. And the reason that they do it is very limited. They do it because they think there's evidence of fraud, or they think that there needs to be a material disclosure by the company that hasn't been made. And that's done to protect the investor. You check none of those boxes here because you don't control the venue. You didn't know about any information that GameStop or any of these other stocks needed to put out. You don't have any reason to believe there's fraud that you've articulated. And you're certainly not protecting these people who've been living the dream of making money, especially at the expense of the big guys. So why should people believe you did this for the right reasons?
Well, we have no choice. We have to comply with all financial requirements and
the SEC hasn't said you had to do this.
Well, lots of brokers have to comply with these financial requirements and have issued restrictions on some of these names. And this is an industry-wide thing. You yourself mentioned that other brokers this week have imposed restrictions. And not speaking for other firms, but for Robinhood in particular, this isn't because there's deals happening with market makers we route to or market participants.
But then why did you allow people to keep selling but not buying? The reason that is so troubling to people is that they were making money buying the stock because they were against the short side. And so by enabling them to sell but not buy, it sounds like you were allowing the hedge funds, and again, one of them owns a piece of you. and they had a big short position. And that looks like a stinky conflict that you didn't come out straight on from the start. Address that.
Well, none of that had anything to do with our decision to do this. Again, this was just looking at regulatory requirements, financial requirements, and we 100% will always protect our customers, where the entire business is operating to empower individual investors and has been since its founding. And that's what Robinhood is committed to continue to do. So we don't want to restrict buying in these 13 stocks. We're doing the best we can to re-enable it, as long as it's operationally and prudent from a deposit standpoint.